Hello folks, I'm L.A. Little and this is your daily TA wrap. We take a look at these markets and we do it from a neoclassical perspective, asking ourselves each time, what happened today and what does it tell us about tomorrow? I do the show 4 times a week, Monday through Thursday, live at 9 o'clock Eastern Time here from the base of the Rocky Mountains. Folks, I'm glad you could join me. It's that time of the year where a lot of people on vacation, a lot of people not really trading. You know, the New Year's coming. Actually, New Year's resolutions probably coming as well. I guess what everybody wants underneath their tree is another market like this next year, because this has been one dynamic market on the way up. Here's the ending numbers today. What do we got here? The Dow's up 129. Powered higher. We actually had 2 or 3 of the Dow components really pushing. Turns out after the bell, a couple of them announced buybacks, dividend bumps. IBM, Boeing, you know, that was powering a lot of the moves today. You got Buffett buying into Exxon Mobil over the last 3 weeks or so. That's powered it to a new high. Just, you know, people pouring into the big caps. 15,884.5. The S&Ps, they tacked on 786.5. The composite 26.5. 4,029.5 is the close. The NDX up 19 1/3. 3475.80 was the close. The Russell up 12. It was the leader today. 12.8. 1119.8, almost 1120. Gold was up. Looks like it's down a little bit after hours, 3.5. It was up about $10 today. Silver was up as well. The dollar was slightly down. Oil, I didn't watch oil today. I think it was flat, and that was pretty much it. As far as what's moving things, right? Let's, you know, we've been watching. Essentially, we've been watching 2 continents. We've been watching ours, but mainly we've been watching theirs. Theirs being Europe, because Europe has been the driver of late and has been giving us the clues that told us last week to be careful, you know, to square up our positions and get careful, right? Well, Europe's still giving off signals, although today was a huge bounce, and we'll look at their charts here in a minute. But now, given that we're getting the bounce, we're going to get our own set of signals. And so if I go to the S&P, the S&P really, you know, the bar that everybody's got to watch is this bar. That's the December 12th, or is that the 11th? I've forgotten. December 11th. That's the bar, top of that bar. That's the wide price spread bar when we came down. Now, we didn't get huge volume expansion or anything like that. We just got wide price spread, and wide price spread gives you a good measuring stick. Well, today, it got into the bottom of it. The bottom, 1780. We closed 1786, so we're inside the bottom of it. If you stay in there for a bar or two, you know, 2 to 3 bars maximum, you're probably going to get a shot to the north side, right? And I shouldn't say it that way. If you stay in there for a bar or two, typically you're going to try to push to the other side. Well, we're in there tonight. We'll see if they stay in tomorrow. And then if they do, come Wednesday, that will kind of be the key day. Do you stay in it or not? And of course, Wednesday happens to be the Fed day. But that chart's not really telling us all that much. If we look at the Dow, same sort of thing. Although the Dow is a little different in that the Dow actually had, it didn't have a wide price spread bar on the way down. The Dow didn't finish up the ABCD structure to the downside either. Remember, this is the one that we were watching, although I don't prefer to look at just the Dow. Some people like just looking at the Dow. The ABCD structure had it coming down deeper. It didn't get there. The ones that are interesting are the OTCs, though. We'll start with the Russell. Again, if we go back to the 11th, right, that bar is kind of a key bar, and in the Russell's case, it really is a key bar. And if we bring up and draw in the prior swing point high and the top of that bar, you can see we're coming right back to it on the push today, right back to that zone. That is the area. So if I look at those two bars, the prior swing point high was October 30th. The number there was 1123.26. The high here on the 11th, 1099. Well, there it is, 1120.92. So from 2092, basically 21 up to 23 and a quarter is the zone, right? That's the price point. That's where the sellers, if they're going to show, that's where you would expect them. We closed today at 1119.85. So we're just underneath it. Looks to me like we're going to test into it tomorrow. I expect it's probably going to fail, and I'll show you why. Now let's go to, and now this is the one that I believe is the one that's going to give us the best signal. And what I say by that is it's the one that's going to do the test. The others aren't doing tests, right? The Russell looks like it will do the test tomorrow and give us some sort of a signal. But the reason I think the Russell is going to have a hard time tomorrow is you can see it here on the NDX. NDX just can't go anywhere. Tried to push up today, couldn't go, just can't get up back into that bar even. It is into the bar, 34.64.40. Of course, it was just barely underneath it twice. 34.75 is the close. I believe this is the one that could give us the signal to the downside tomorrow. So if the Russell fails, and if we see the NDX pushing back down here to test these lows again, then we may get that push back down into the support zone that's lower. Now, if you think about it from the perspective, we can look at it both ways. If we think about it from the perspective of downside, what's the deal there? Well, you came down, you got a little bounce, now you're going to try to come down again. And if you do, you can see how that brings you right back into the support zone on the NDX. Now, if we flip back real quick to the Russell, you can actually argue the other way, that you've got a larger structure in place and you're getting an ABCD structure to the top side. And to see that, we actually have to, just a second here we go. I have to pull this back over. And you can see it here on the weekly, right? So on the weekly, you would have an ABCD structure that measures from here to there, back down and up. Didn't quite finish, and now you're actually coming back down and going to try to do another one, right? So on the weekly, you can argue that the Russell's going to try to come up and touch a new one. Of course, that assumes it's going to go higher. Both cases can be argued just on different time frames. The longer term time frames on everything, right, they still look fine. I mean, I cannot argue the case that this looks bad. It doesn't. It only looks bad if we come down and we start breaking swing point lows. So if I were to see the Russell actually fell here, right, because just like we saw in the NDX, this may be just simply the bounce to take us lower again. If it comes back to test these lows, The price point on those lows, 1079. The price point on this low, 1076. So you can see if you come back down into this area, this is going to be an issue for the market because you're going to have multiple swing points on multiple time frames potentially breaking. So that, if I'm looking for danger, this is the danger, right? And that's where one has to certainly be a little bit more careful if in fact we get another ABCD structure to the downside. And it's one of the reasons I'm saying the Russell is going to be a good test tomorrow. And on the flip side, that's to the upside. On the flip side, to the downside, it's the NDX. Now let's push over and look at Europe, because Europe got a nice big bounce today. And let's try to make sense of what happened over there. So the CACs, the CACs, the French market. On the French market, you got decent volume, push up, had been just devastated down because of the breaks of the multiple swing points. Now, anytime you get a break of a swing point, right, you have the potential to trade back up to it to try to do a retest and regen. The last one that was broken would be this one. That would be the first one to retest and try to regen off of. So if you're looking at that price point, on the CACs itself, that low is 42.04, right? We're trading at 40.51. Excuse me, we traded to 40.51. We closed at 41.20 roughly. 41.20. Another, what is that? 80 points, about 80 points to get back up there. Well, today, top to bottom, you did 40.51 up to 41.28, so you did almost 70 today, I guess. Or is that about 60? A little over 60, 67 points today. So you can see another big day tomorrow could bring this thing right up there. But I suspect it's going to have problems before it gets there. And the problem area actually is off of two bars that are here, which is the top of this zone, the anchored resistance that it's coming into, and the bottom of the big wide price spread bar on the way down. That is going to be a trouble spot on the way back up. So if you measure what that is, the bottom of this bar is 41.48, and the bottom of the big wide price spread bar is 41.72. So from 48 to 72, yeah, we can push up into there. I do think this is going to stagnate if it comes straight up there. I just don't see it getting over that right now. A little bit more bounce, yeah, it's possible. Does it have to? No, not really, right? Because if you look at the low here today, 40.53.41, you pushed towards that low. You didn't get under it, but you pushed towards that low. You had some decent volume, so it can certainly come right back. Good bounce, only a bounce probably. The reason for the bounce, and we haven't gone to China yet, China sold off on their PMIs. Europe bounced on theirs, but the French market bounced on the German market, not on its own PMI, because its own PMI really wasn't that good. Here's the German market. Now the German market is set up similar to what we saw or we see in our market. And that is, although they're different different dates here, the German market has a wide price spread bar here and a high there with volume on it. This had volume on it on the way down. So we come back up today, right? We're doing almost a million, right? We're coming into 1.4, and we're also trying to come into 1.1. So we're coming back up. We'll see how it hits it tomorrow, because it didn't quite hit it today. 91.87, got within 6 of that one, and it's, 30 points from the bottom of that one. So the German market looks to me like it is going to try to get into it tonight, our time, tomorrow their time, and push into there and do the test, just like the Russell is trying to do the test. So the upside test will be the German market. Now let's go back to our sectors. Off the continents, back to the sectors. Okay, I want to quickly, and I did not get a chance to review these, so I want to quickly look to see how they're shaping up here. So let's see what these look like. Pull this back in some. Alright, that just looks like a dead cat bounce. Same thing, that's the 11th, right? The 11th is the bar on almost everything. So if you start to see prices push over the 11th on sectors, indexes, things like that, that's going to be a signal that something's happening. And you can see here again on the 11th, the big price spread bar. It got into it today. This is the SMHs and failed. And this was with a huge takeover with AVGO taking over. I think it was LSI. Was it LSI Logic? Somebody they were taking over somebody. Both of them were up huge, but still SMHs couldn't even push. XLB had some strength early. I think it gave it up, and yes, it did. So you're seeing the same thing. See the big bar, the 11th. You're coming up there. You don't have anything. These all look like dead cat bounces so far. They just look like bounces that are going to try to trade lower. That's true here of the XLE as well. Let's see what the XLF did. XLF looked like it had the most strength today. Yeah, and volume was coming into it too. So if I had to pick one, that's the nicest one. Even though you're getting big volume, you didn't get much price movement, but the volume's definitely there. We'll see what it does when it tries to test that high on the 11th. But these all look like dead cat bounces. And remember, all of these were set up to try to break swing point lows. They were close. So here's the first test of the high, industrials, which I guess shouldn't surprise us given the production numbers today and the PMI. 50.41 was the high. 49.70, no, 50.38. 50.38, 50.41. So it goes over it, has less volume, closes underneath it. That's a failure to try to get over it. Volume was decent though. You'll probably see it try one more time. XLK. So far I don't see anything here to tell me that these markets are going to run higher yet. XLK looks the same, dead cat bounce. XLP. Wow, that couldn't even bounce. XLU. So that's still in a range trying to go after the next low. Can't get anything going on the XLU. XLV. Nothing there. These are failing into the bottoms of that same bar. And how about the discretionary consumer? And we'll try to test tomorrow. So I don't see anything in the sectors to make me think this market's going to trade higher. Let me go look at the OX markets and see what the bonds did. Oh man, they can't lift. This is like a problem waiting for an accident, or an accident waiting for a reason or something. And just sitting right at the lows on the weekly, sitting at the lows on the daily. If this breaks, it's multiple swing points, multiple time frames. It's going to lead to a fast move. And you know, you never like to see, I don't think I've talked about this before, but you know, one of the things that you're always looking at is the velocity of a move, right? This was a fast velocity. Okay, when it gets down there, right, it's already gone a long way, right? Fast, furious on the way down, right? So when you get down there, you get a bounce, right? That's kind of what you would expect, right? Then you come back, fast and furious. What happens? Well, you get under it, but you get another bounce. Now you come down pretty fast, you get a little bounce, and now you're just hanging here, right? You're hanging in this area. When you start hanging and just chewing up time, and you can't lift, right? There's no lift. That says this thing is going to try to go after the lows and break them out. Now, I don't know what the Fed's going to do on Wednesday, but these bonds look ready to try to break if they do the wrong thing, so to speak, right? And if they do any kind of tapering or if they set dates for tapering or whatever, I think the bonds are going to try to crack. If they do, I don't know how the market lifts. You're right. A fast move down in bonds, which is what this will be, is going to make it very hard for a lift. Let me see what the junk and the municipals are doing. So the munis, they can't lift either, really. How about the junk? And it's probably still holding up well since the market is. Yeah, it is. So, all right, gold and silver. Let's take a quick look at these. So, pretty good spike up and couldn't hold it. What does the GDX look like? The miners. About the same. GDXJ. I saw that Barrick Gold cutting back production. You know, one thing about commodities is commodities will correct themselves over time, right? If the price starts to correct, if there's too much supply, they'll just take and quit producing as much, right? And then the demand will eat up the supply, and then you'll be able to get your rise. You don't really get that natural phenomenon in stocks in the sense that it's not like the corporations quit producing stock. To some degree they do, in that the IPOs are not nearly as well received, and therefore there's not as much supply coming on the market. But it's a very different dynamic than it is from the commodities. Let's see. I want to see what the dollar did today, and then take a look at the euro too, because these are the ones that are going to try to move. So the dollar's still hanging. Let me see what the euro did. Euro was up testing the highs, failed at the highs, actually didn't test them. Pretty good spike in volume today. This euro has been setting up one after another ABCD structures on the upside, and it looks like another one's in place now. So you got another one here in place. If that one breaks, right, you're going to get a break here. You're also going to get a break on the weekly. That's going to set off a fast move up if in fact that takes place. So I would think tomorrow you see this thing mill around some more, and you know, mill around down in this area and wait out the Fed. I mean, that's what this one's doing. And if the Fed doesn't taper, this thing's going to try to run higher. If it does, it'll surprise it and it'll get smacked probably. So it's like flipping coins, I guess, huh? I guess if you knew what the Fed was going to do, you can make a lot of money, right? Commodities can't do anything in general. Let me see what copper's doing. Oh, well, that's interesting. Copper's got a nice run going. Although it's still a big range trade. If I pull this back over, you can see here on the weekly it's still a range trade. But remember, copper pushed up with some nice volume, tailed all the way back down, now it's back up. I saw UNG was down today. How about USO, oil market? Yeah, still hanging up there. Those are all kind of dead markets. I don't see anything to do with them but wait. Okay, so I want to go one more time back to the world markets and see what Asia looks like. So all ordinaries, Australia's been getting hammered. They were bouncing. Boy, they can't get any bounce though. And that's primarily due to China. Let's see what Hong Kong did. Hong Kong under and back over. That one's probably going to try to bounce tonight. Even the Australia market would try to bounce, given that setup it had. Let's see, Nikkei was down again last night, although the Nikkei still wants to try to test that high. Yeah, this looks like it's going to bounce too. How about Taiwan? Taiwan had tested the highs last week and failed, and yeah, they're coming off as a result of it. All right, let me see if there's anything asked of me here real quick before I run out of time. Nothing there. Check the text messages. Folks, you know that you have multiple ways to talk to me if you want to send me or request for me to look at anything. Right? You can do it, of course, on live stream itself. Just type it in. You can email me. You can also text it. And if I look at the text messages real quick, nothing tonight. So, quiet night. It looks to me like what you're going to see tomorrow. I mean, you got the PMI numbers are out of the way now. Now you got the Fed, right? Those PMI numbers helped the markets. There's people saying, hey, you know, now the economy we know is great or is getting much better, therefore taper's not going to matter. Folks, if they taper, it's going to matter because nobody's expecting it. If it was built in, price was built in, it'd be a different story, but it's not, right? Nobody expects them to taper. That sell-off last week had nothing to do with the Fed. That sell-off last week was Europe. And it's primarily the French CACs because France, if France goes into a recession, it's a big deal, right? Because Germany and France are the two biggest markets over there. And so, you know, if in fact that is what's happening, which is what the market is discounting, right, then that's a big deal. And our markets were capped by Europe, not by the Fed, not you know, it had nothing to do with Fed tapering and stuff. I mean, if anything, the Fed keeps telling us they're not going to do anything yet. So, you know, if you're wondering what was moving us last week, it was Europe. And if you caught on to that, then you were able to position properly for it. All right, I think I'm going to leave it at that. I've said what I want to say. Tomorrow is going to be a test on the Russell on the upside. And if you want to look at it one more time as I go out here, I'll show you one more in case you missed it and came in late. There's two tests that are going to take place tomorrow. One's on the Russell, and that's a test to the top side. So if we bring this in, tighten it up a little bit, the test is here. It's on the December 11th bar, and the high back here from the October 31st bar. The other test is the NDX, and it's going to test to the downside, or at least try to. Because why? Well, it popped up today, couldn't hold. It looks to me like it wants to try to come back. And if you look inside the NDX, the weak link right now is Apple. Apple is the one that can't hold it. It's trying to come back. It's going to try to come back and do a retest regen off this high. That high is 539 and a quarter. That's a good little piece down. So if it comes back there to test that, right, then that could set up some sort of an ABCD structure on the way up, right, which would lead to nice things for the new year. Or maybe that doesn't. But right now, it looks to me like that is what it's going to try to do. It's going to try to come close this little gap that's right here and try to get back in and do a retest regen off that breakout. And we'll see if it does. And such a large weighting, you have to watch Apple. Question real quick here. What do you think happens if the Fed doesn't taper? I think it's already built in. I think it's built in. If the Fed doesn't taper, you know, if you ask me, the way I like to look at these binary events is what is the expectation? Because if I know what the expectation is, I know where the risk is. My take is that the expectation is that they're not going to do anything and they're not going to set a timetable. That's my expectation. I expect that that's what the market has built in. So if they do that, then yeah, you can get a little relief bump off of it, but I don't know that it carries anywhere. And then I think Europe becomes the driver again. And then the question is what does Europe do? Europe, to me, doesn't look like it's done. And so if the Fed doesn't taper, yeah, you can get a little bounce. So you can get a little continuation bounce. Maybe we bounce a little bit more. Maybe we come down tomorrow and bounce right back up to where we were today. I just don't think you're going to get much juice out of the Fed doing nothing because I don't believe that's where the risk is. The risk is to the downside. And, you know, the price is already built in. All right, folks. Have yourself a great one. Thanks for joining. And I will see you tomorrow. And we'll see how these markets do those two tests. Those tests are the ones that are going to define how we trade into the Fed. Have a great one. Take care. See you next time. Good night.